Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, May 28th, 2010. Happy Friday to everybody. This morning we're talking about the summer is upon us. All right, for now the Eurozone debt crisis appears to have been averted, and I use "for now" as the operative words there. The Euro's higher for the second day in a row. It looks like some short covering is taking place. As I've mentioned, every day that the Euro gets by without some sort of negative news is a positive for the Euro and for world markets in general. So earlier today, we saw the Euro test some resistance here around 124.5. Let's just take a look on the chart here. We're looking at a 4-hour chart of Euro USD, and as you can see here, I've set up a Fibonacci retracement level. Looks like I've drawn it off a little bit, but the first level of resistance is at around 124.5. You can see it just got up there and touched it, and now if we switch to the 5-minute, we can see that that is just selling off a little bit now. That's what we're seeing here for the Euro. There's also some 126 resistance. Not certain it's going to get up there real soon, although you never know what happens next week. The news coming out of Eurozone is most likely going to be not negative, but not necessarily positive, so we're going to have to see what happens there. Also this morning, consumer spending figures in the U.S. came out, and they came in worse than expected, which kind of shows signs that maybe the consumer-led rally may have stalled a little bit. This is about to be a long weekend here in the U.S. with the Memorial Day holiday on Monday. So you got traders kind of, squaring their books and maybe taking a little bit of risk off the table going into the weekend, because the likelihood that any news out of the Eurozone next week is going to be negative more than positive is probably a better bet. So that's what we're seeing today. We're seeing some mild risk aversion, but we started off in risk-taking mode in the overnight sessions in Europe, and that's sort of what's happening here. So just taking a quick look, you see Aussies down real quick, Kiwis down as well. That news yesterday I mentioned that the IMF said that the Kiwi may be overvalued is sort of weighing on that. We can just take a quick look at the Kiwi here. The other news was that they had their home building approvals jump to 8.5%, which is a 2-month high. So, that's a good sign for economic expansion. So we'll have to see what happens in the Kiwi. But, right now people are just sort of taking a little bit of risk off the table, just going into the weekend. So we talked about the Euro. Just want to look at the pound here real quick. Okay, pound is lower as well. There's reports out that the political honeymoon may be over. So, the new government's coming in, but they've enacted all these budget cuts. All right, consumer confidence in the UK actually fell to a 5-month low. They're sort of preparing themselves for a little bit of self-imposed austerity, trying to get their budgets under control. And that's what we're seeing, in some areas around the globe, including Europe, that have problems with budget deficits. So, the dollar, we're kind of, in a little bit of a sideways market here. The dollar's exhibiting some strength. We've got a Michigan Consumer Confidence Surveys due out at 10 a.m., which could help the dollar find its eventual direction by day's end. And then lastly, I just wanted to take a look at the Japanese yen. Let's just look at it versus dollar here. Okay, it looks like dollar was a little bit higher. Now we're seeing some yen strength. Overnight, let me get rid of that. Overnight, Japan reported that it had an increase in its jobless rate, which indicates that maybe the export-led recovery is not translating over to new jobs. So businesses are potentially fearful that perhaps world demand is going to abate a bit, so they're a little bit hesitant to ramp up hiring. Okay, in addition, deflation figures came out through the CPI and continued to plague the economy as consumer prices fell 1.6%. Now, this most likely means that the Bank of Japan is going to continue with its accommodative monetary policy, and we expect the government pressure to continue to do so to pick up. So that's what we're seeing here. Friday going into the long weekend. Expect volumes to be a little bit light. I don't expect a lot of new positions to come on. People are probably either pairing or taking gains from the little run-up we've had this past week, or doing some short covering, that sort of thing. So as we move into the summertime, when economies typically slow down, we may be seeing a return to the fundamentals. All right, especially if the eurozone can avoid these economic landmines that appear to be out there. All right, so going forward, it seems like world economies are committed to reducing their deficits. All right, so this is going to bring about some economic slowdown, and of course, the challenge is going to be, maintaining that balance between economic slowdown and causing deflation. All right, now if we get global deflation any further, then this could bring about a whole another set of problems. But till that happens, I'm just going to be happy for the long weekend, kick off summer. Going to get me some sun. It's been a crazy month so far of trading, so I would advise you to do the same. So happy trading to all. Happy Memorial Day to those who celebrated here in the U.S., and we'll see you next week.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.